Well, it's going to be the factor of that will determine our success. The people below us, right? Because at the end of the day, that's how we're growing vertically and horizontally, right? We want to grow services. We've talked about many times, different things there, but then also within what we're doing, different locations, many different traders. And it's just, I would almost define this next period as what you're saying now, which is relying on those people and hoping they can pass the baton with culture. Hi everyone, welcome to another episode of World of Oil Derivatives. I'm Greg Newman, Group Chief Executive, Onyx Capital Group, and today we have another episode of our leadership series. And today I'm joined with co-founder Onyx Capital Group, Omar Kayaam. So Omar, thanks for joining us. I know you don't love doing this, but we did one last year, and it's good to have an update. We talked about how we actually made this business and what we're thinking. I thought it'd be a great idea just to go a year later. Let's talk about all the things that have been going on and are going to be our focus going forward. And just a recap in general. So just a quick reminder before we do get started, please like and subscribe to our YouTube channel. It makes a big difference to us there. So I guess what's the biggest change since a year? I guess you obviously were pulling out of trading a while back, but I would say even more so now in the last year, right? This has been so much to build.
Yeah, I think we've done so much over the last year. I don't know where we even start. We've gone from a London office to now having presence in Switzerland, in Singapore, fully fledged team. We are looking at new places. We've made some serious hires, some big names from the industry. We've got a big board, some well-reputed people. We've changed, market making is our key trading style, but we've also evolved into more technology, more systematic. I guess so much has changed over the last year. So I guess we'll break it down and try and go into it. But for you
personally, what's the big feeling, do you reckon, since?
I think we've, as a company, we've evolved into now having a proper structured company with proper big hitters, people who we can rely on and give responsibility. So the growth has accelerated massively. The trading flow has grown significantly, and it's kind of now almost stepping back into more strategy, more management. What do we do next with the company? The oil industry, the oil and gas industry is evolving rapidly as well. There's a lot of new innovative platforms coming into it as well. So making sure we're one step ahead of the game, which we are, and kind of managing and growing the business, I would say. Trying to move away from the day-to-day trading and caring about trading P&L and what exactly is happening in the market on a micro level to kind of looking at the bigger picture, I think, which is what you stepped away about 4 years ago, whereas I stepped away about 2 years ago. So kind of catching up, I'm 2 years behind and catching up.
No, it's a good place to start actually, because again, we were, I guess we all always are quite hands-on in the business, but the last year, I think there was that line in the sand being like, we need proper layers of management, proper board. So I think buying out the investors was a pretty big milestone for us, but they retained around 8%, and we did a proper share buyback about 6 months ago. That's it now. They're fully out. So it's entirely employee owned, and I think with that was a big step was to be like, let's have an actual functioning board with the entire point of it to help us with strategy and push forward. So that was obviously David Franson, who's come in as non-exec, ex-BP, ex-VTOL, and then Pete Smith, ex-Morgan Stanley, ex-VTOL as well. So that's the board at the moment. I think that's been a pretty material shift, right? Just the board meetings themselves.
I think, it's been a great journey over the last 7 years with our investors. They played a big part in what we've achieved, and they've, helped us along the way. But, the first 5 years, I think they had more to say how the business was run, or the first 4 years. And then the next 2-3 years, it was kind of a hybrid where we took more control. And with that, you always get a bit of friction in good and bad ways. And it's nice to now finally own the company 100%, Greg, myself, and our employees. And now we can kind of do, not that we're going to do anything silly, but we get to run the company how we want. And the first thing we had to do was get proper advice, get proper advisors. And as you said, Pete Smith, I think 17 years at Morgan Stanley, 15 years at VTOL. David Franson, spent so many years at VTOL on board levels. Having that kind of wealth of experience and knowledge goes a long way for us, because at the end of the day, you know, we need help along the way, and having the right people
have
is
been there
essential.
and done it.
Yeah, they've been there, they've done it. And again, when you go to when we touch later on the C-suite level of people we've hired, again, these guys have been there, they've done it, and they're experts in their field. So I would say we've kind of leveled up multiple levels over the last year in terms of key personnel who sit below us or work alongside us, and I think that's going to go a long way over the next few years.
I think the company had to get big enough in order to warrant those big roles, right? You get big personalities, people with big experience. They actually need the role to go with it. They need the you know, there's no point just hiring big names for the sake of it. It's like, okay, so even John Beckwith, right? So we hired HR. We were struggling with HR, right? It was a tough one to get right. And then we've gone right to the top, and like, you can't really call him HR because he does so much. It's almost like kind of a COO type stuff as well, chief of staff. We called him chief of people. And, you know, he was a big one because of like, let's get this really well organized now. Let's get like how HR should definitively be. He was really important for that. But the company was big enough for him. Like last year, it actually wasn't. So a year later, or sorry, maybe 18 months ago, it probably wasn't. So now we've got 130, 140 people. It's big enough in people, it's big enough in terms of issues, and it's diversified enough in terms of like, he's got a big role to play.
I think, I'm sure they would have been helpful if they had them a year, 2 years ago as well. But as you said, it wasn't the right time. And I think we've done really well with the limited resources we've had and the level of resources we've had. Whereas, 2 years ago, if we wanted to hire some person, or we had some kind of dispute with an employee or other companies we're hiring from, we'll get head of HR and kind of tell them what they need to do. But every day or twice a day, we will have to handhold, and we pretty much end up doing all the work ourselves anyway. Whereas now with a guy like John, any issue, we just hand over the responsibility, and we can trust them wholeheartedly to not mess it up and kind of work to our best interest and get the job done right. Well, and again, that comes with the level of experience and caliber and the situations we are facing as well.
But that's just it, like the microcosm of like the role itself and the day to day. But actually also with a kind of C-suite level employee and the experience you get, like John's 30 years old, FTSE 30 companies. He has his vision for HR as well, right? So he's got the learning and development, the performance, the in-house recruitment. It's a big thing he's trying to do, and so you don't actually get someone who just comes in and does a role. They take on a whole new like area and run that area. It's almost like they're the CEO of the area. That's been a big shift for me, and that's the same. 100% has to be said about technology, right? We've always been passionate about it, but we've needed someone to really drive it. I think with Ishan, that's what we've got, right?
Yeah, I think they've both been exceptional hires, right? Again, one thing is trusting these people. That goes a long way. At the end of the day, if you trust the person on a personal level as well, that's very helpful. But as you said, they're CEOs. They know how to manage teams, groups. They know how to manage conflicts. They know how to manage, little petty issues. They're just so experienced, and they also know how to manage us. Because a lot of the time we can come across quite harsh, and, they will take all the positive feedback and work on it. And, if we kind of slightly unreasonable, they'll just brush it away and kind of move on, which we aren't, by the way.
I know what you mean. There's maturity.
The maturity, right? Whereas previously, you have these people who just, they want to speak to us all the time. They're like, I only speak to Greg. I only speak to Omar. They just had all these levels of entitlement without having done the work or the experience. Ishan, for example, he's built a company on his own, Bunker X. He's JV'd with a different business. Then he's sold it to a different business. They've all been there, done it at high levels, right? And even Andrew Chen, who we've hired as CFO, FTSE 250 companies. I think it's the right time, and we are making this push. We've done all the hard work over the last 7 years, building the groundwork, building the market share, building the trading presence, building our relationships with exchanges, brokers, and whatnot. And now to take it to the next level, you need seniority, you need maturity, you need experience. And I think we have, it's the first time we have a C-suite and a good C-suite who we can rely on completely.
And now it's about, I think another thing I'll be interested to hear your opinion on is, we're making a trading decision. You can make, 100 a day, or you can make slightly slower trading decisions if they're more directional, let's say, but nothing like really kind of challenges the type of decision making you need to make once a business gets to a certain size and you're the C-suite or you're the executive directors. At the end of the day, if we make a decision now, a strategic decision, a new office in a new location, new hires, new product base, it can have ramifications across the whole business. So there's upside where you can make a $20 to $50 million decision, but you can also set the dominoes, as we've seen with some competitors and some other people, and you set the dominoes the other way by making the wrong decision. And I think that's got to have been a change in your mindset.
Yeah,
as well,
I
right?
think that's what we are paid for, right? That's kind of C-suite, making these high-level decisions. And as you said, where do you spend your time? Where do you spend your resources? Where do you hire? Where do you pay sign-on bonuses? And again, when it looks good, no one gives you any credit. They're like, oh yeah, that was obvious. And when it goes badly, then the blame is kind of on you. But as long as you have a good team, you have a good process, and you kind of think it out, you use your advisors, you use your board correctly, the probability of you making these decisions right increases. And again, Switzerland is a good example. That's a new venture we've gone into. We've hired 2 experienced traders, given them a lot of responsibility and trust. But the same way, we have put a lot of steps in place to make sure there's high level of success. And again, right now, the signs are looking good. So, yeah.
So I think one thing as well, like, again, I do love this about Onyx, but it's also, it's not for everyone, where things are changing like so rapidly, so quickly. So you talk about Switzerland, and then we've talked about Singapore a little bit in the past, but that's now a big office. Singapore has got, half our senior traders. Yeah. And it feels strange to me, at least, I'm not sure about you, how you definitely can't micromanage because they're in different hours, but also you can't get a feeling, like a direct sense of the culture, because you're not there. And you got to rely on the people that you've got underneath. And that's been a massive challenge, I would say, for me. And it's something for the future is going to continue to be a challenge. And it's a form of delegation, right? We're talking about C-suite, but then we then need to delegate, be much more beyond that, right? Like Legier in Singapore, like he's running that with Laren, and it's a lot of pressure on him because...
Yeah, we have some big hitters out there, right? Leisure, again, Onyx employee number 1 or 2. Jasper, one of our veterans who've been with us almost from day one. He moved there a couple of months ago. And as you said, we have him, we have Jody, we have Ben Woodcock. So we have a strong team there, and the presence is going to increase more and more. The good thing with Singapore is we have some of our core DNA there with Leisure and Jasper. And again, it's time for these guys to step up and kind of run those offices, run the risk metrics. Again, as we've grown and as we're looking at so many different ventures, for me personally, it's very hard to look at everyone's risk, everyone's position.
No, exactly, yeah.
So, Liege and Jasper will have to take that leadership in Singapore, be good role models, question traders, manage traders. Because again, managing traders is one of the hardest things in the world, right? When they're making money, they're amazing. When they're losing money, again, they're amazing. So for us, it's time for these guys to step up. And as we grow, it's harder to control the culture because up to about 100 people, everyone being in London, we kind of knew everyone. Yeah. And now the more you walk around the office, I find it harder and harder to remember names. And you can't be friends with everyone anymore. I think, I've realized that a lot in the last year. I think you probably realized that about 2.5 years ago. And it is a part of the gig. And we have Laren out there who's been, CEO of Ginga. So yeah, I think we will be putting more and more presence out there and
more trust in people.
And I think we will be visiting there once every couple of months as well. It's always good to go and show your face and, speak to senior management out there. But yeah, it's important to keep the culture because Onyx has a great culture and great DNA and everyone loves working here. So we need to make sure as we grow to different areas, we somehow try and get that DNA embedded in those businesses as well. And that might mean people from Zug, when Ante and Mirko started, it was very critical that they worked the first 3 months in London. And that was great because everyone got to know them, they got to know everyone. And now the plan is for us to go there once a month and for them to come here once a month. Because again, when you communicate, it's so much easier when things go well or badly when the lines of communication are open, right? Because if it's not open and things go badly, you panic. When things go well, you panic again because you don't know why it's going well. So I think building that trust and communication is a big step, for both of us over the next few years, especially with Dubai in the horizon.
Well, it's going to be the factor of that will determine our success. The people below us, right? Because at the end of the day, that's how we're growing. vertically and horizontally, right? We want to grow services. We've talked about many times, different things there, but then also within what we're doing, different locations, many different traders, and there's just no way to do that. And I would almost define this next period as what you're saying now, which is relying on those people and hoping they can pass the baton with culture. So again, if we go back just a year, and it's always nuts to say that, like how much has changed in just a year, but the markets themselves. So we've had a crazy 2020 to 2024 in terms of markets, but I would say in the last year it's been quite existential and interesting for the financial oil landscape, in particular market makers. And we had, we met 12 years ago almost practically to the day at Mandara, and Mandara is now officially closed shop. And that's pretty crazy to think, right? That was where everything started and everything built out. And then you've got other competitors, other people in the market making space who are looking at themselves the same way we are and saying, what's next? How do we evolve this? How do you go forward? And that just feels like very different to what it was even a year ago. Do you agree?
Yeah, I think also the market conditions have changed massively. We've had 2 to 3 years of hyper volatility where a $15 million trader was making $150 million in all these trading houses. So the opportunity was really good. And now we've kind of come to a realization that the volatility has died down. So it's kind of exciting next few years how people evolve. The market making space has got super competitive, and Mandara, it's a sad story, but again, it created some of the best traders in the industry. So all the leading market making shops are still run and operated by traders trained from Mandara, which is still a remarkable fact. But yeah, I think the space has evolved. Again, the volumes have increased significantly in oil. It's unbelievable how every year we keep thinking, well, we don't, but a lot of the people think that the volumes might decrease, and it just completely doesn't. And I think market makers are doing more and more in this space. So costs is now a big part of, big area of concern, because the margins have got a lot tighter. So it's going to be harder and harder for the smaller shops to manage and evolve. And I think in the last 3-4 years, because of the success of firms like us and a couple of other firms, a lot of new entrants have come into the space. I can name about 4, 5, 6 over the last years. And again, they are throwing out ridiculous deals. They're throwing out ridiculous offers. But again, having good systems, having good technology, having good people, having good deals with exchanges and brokers, and having your cost base under control is super important. And how do you do that? You have to be big. You have to have market share. You have to have market presence. And what we've done really well over the last 2-3 years is we haven't been complacent, right? Despite holding a big percentage in the oil markets, we have continued to grow our percentage there. So our market share and our leverage has continued to increase. And I think with the addition of our Dubai office and our Singapore office, we will have access to more market share. Singapore, we will be trading more early hours. So again, you have to constantly evolve, right? It's not easy.
Evolve the market in a way.
Yeah, evolve the market, start doing new contracts, new products, new things. And everyone thinks, oh yeah, market making is easy. No, we're actually trading. A lot of our traders are trading for scratch, for the information, for the market flow. So again, we are making brokers very rich. We're making the exchange very rich, which we are fine. We are happy to do. But again,
well, at the same time, this is what I'm saying, like it's changed so much in the last year. And then if you take away the market conditions that have made the margins good, and when everyone's happy, but then, one layer of it is if the margins compress, people start to worry about things like costs, like you're saying. And I think everyone always talks about oil markets in particular redefining themselves, but actually nothing's really changed. You would argue, if we look at last year and rewind 10 years from that point, I wouldn't say a hell of a lot's changed, but the last year it starts to look like it is actually, it's much more of a focus on data, a lot more of an appreciation for what drives markets. There was like a complete, focus on physical for the longest time. And now, every major trade house, every major oil company, they all seem to have systematic arms, quantitative arms. They all seem to be looking at financial flows, financial data. And it's just a new way of doing things. And I think we are finally getting to that point that's been, promised for a long time and not happened, which is the kind of ultimate efficiency of oil trading, right?
Yeah.
So we've got like a kind of Jane Street and Flow Traders effect when they were first started in ETF market making. ETFs now are huge. There's ETFs for everything, and they're the biggest market makers in that game, and their company booms on the back of it. So now market makers in this space, they're yet to have a kind of Jane Street type model, right? It's still more OTC broking, all that, but surely the next 5 to 10 years that won't last. I mean, you have to say, but we don't know because people have been saying this for a long time.
It's interesting because again, the markets in oil now are almost as tight as a screen. You go on any 92 RON spread, it's 1 or 2 cents wide. So in a way, it's almost trading like a futures algorithmic screen with the Jane Streets already, except it's still broked and it's still managed by brokers. So again, I think there will be some kind of hybrid element that comes over the next few years where the technology plays a bigger and bigger part. But also to touch on your previous point on, if you compare this year to the average of the last 10 years, it's pretty much the same. But you also run the risk of, we're a very company where we get top quality graduates and train them and give them responsibility early. And a lot of them have only seen the 3 years or the 4-year cycle since COVID. So for them, all they've seen is ultra volatility, big bull moves, big rallies. So again, it's kind of a if you're kind of a junior or you've been in the oil space for 5 years, it's a very tricky period to trade because all you've seen is, things only move up, they will draw down and they'll continue moving up. So again, a lot of evolving and self-evaluation and self-learning is very important. And again, as a company, we have those processes in place to make sure things like this are avoided. So the last few years, we've let our traders run, they've just been doing better and better and better. And every now and then you get a good reality check. So it's super important that you have the systems and processes in place, which we do. But coming back to your point on, the Jane Streets of this world, will oil eventually head fully that way? I don't think so. Will there be a hybrid? I think eventually there will be. And I think it's getting closer and closer. The amount of technology offerings there now compared to 5 years ago, there was nothing. 5 years ago, there was BlockX, Tellurium, or, there were 1 or 2 things which failed. And now there's 6, 7, 8 things you can name easily, right? So it'll be interesting. There's a race for technology, real estate.
Yeah, there is. And there's a race for people to establish their sustainable business model, right? So if we look at Marek Spectrum, for example, they were a broker in commodities, very good at metals, ags, and a bit of oil as well. And they just grew and grew and grew through acquisitions. And then suddenly they made this pivot, buying clearing businesses. Now clearing is like the biggest part of their P&L. And then they've got, a lot of other areas. And they've now got, they've IPO'd business. They now look very different, but very interesting business, bilateral type stuff going on and all the rest of it. And that's a massive pivot if you think about it. And you look at TPI Cap, and they are also a brokerage that was focusing on consolidation and focusing on market share. That's now effectively a data business, how it seems, from how they make their money and their growth from now on. So I think that's what's going on as well. Like the brokerages of this world, the trade houses, even everyone's looking at their business models, kind of thinking, what's next? Actually, sorry, probably not the trading businesses, trade houses, because they're very well positioned for the current environment and they'll continue as is, and they don't need any more cash, right? Because they've done quite well. But if you take them out, all the services, essentially the exchanges, I think it's got to, even the PRAs, Platts, it's gotten to that point where peak maturity, really ramped up fees, as you were saying, costs becoming more and more of a problem for the industry. And that screams of a marketplace that is about to, evolve essentially. Like, is it going to be, you pay a huge amount every price, every deal you do, you're paying 3 different companies, PRA and exchange and brokerage. Does that continue? Does it evolve into something else? Is it more about data? Where do people monetize? Are there more people that can get into this space? And obviously that's another thing for us to discuss.
I guess it'll eventually get democratized. I think over the last 10 years, there's been, for each area of the industry, there's been mostly 2 people monopolizing areas, from PRAs to exchanges to
even analysis, right? Your S&D analysis is basically energy aspects now, but then you've got Kepler now who are trying to compete. They've got ship tracking, and those 2 are the biggest, and they're the most, they got all their distribution for the rest of the industry. But you can only ramp up costs so much when you've already got the market
Correct.
share. So where does it go from there? And
Yeah.
that's the interesting
And
bit.
I think information is easily available now. Like it's a lot more readily available. So if you have good technology and good data scraping tools or data managing tools, there's a lot of these new companies coming through. Previously you'll have to fly physical drones, or you'll have to have a connection in a certain country, whereas now everything is available online, right? So it's kind of a big arms race, but more of a technology race. But again,
a cost race as well, if you see what I mean.
Correct.
And it's something we've got to consider, right? The life cycle of your business is always a mentality of, well, we're making this, we made this last year, this is our growth rate, this is our expectation, we'll just grow forever. And it obviously never works out like that.
Correct.
You've got to think about moments in time where the markets evolve. And I don't know if you agree, but it's become a big thing for us cost this year, and I'm sure it has for other people. And I just don't think it's sustainable the way the market is currently set up. So where do we go from here? I don't know.
Yeah, I think for market makers, active traders, liquidity providers, the system or the structure in oil is very different to any other market, right? In equities, FX, market makers almost get paid for liquidity, whereas here we end up paying, more than trade houses in certain instances. And again, as you said, when business is booming, business is growing, volatility is there, you don't really look into this too much until, every now and then you get a reality check, and then you look at your costs and you look at your cost base, and it's just grown exponentially, and the margins have decreased exponentially. And in a way, more market makers, more liquidity, more competition, it's getting very expensive, right? And again, PRAs, for every barrel of oil you end up paying 4 or 5 different people a piece of the pie, and the margin you're taking is 1 cent a barrel. How is that sustainable, right? Of course, we've evolved methodologies to trade around that. But again, when you look at the numbers growing, and then there's a dip, you have to react, and you have to make changes, and you have to rethink your business model, and you have to rethink
where are you monetizing on the chain. And that's
Correct.
what these things have all been about. I mean, we've taken what are all the things we can do within our expertise and our strategic position to maximize like the diversity of our revenue. And like, we've still got a long way to go outside of trading. But I think the most powerful thing is, as we've always said, and I think we've mentioned it more than enough times on podcasts as well, we're about being in the strategic position and combining everything together. In other words, if you're in the trade and you're doing all these trades, and as you say, you're paying all these people, at some point people have got to consider you a service, given all the risk we're taking, given all the how difficult it is to provide liquidity so effectively in relation to what the market needs. The market requirements are growing all the time. It used to be just to get a counter, just to get an offer when someone had a bid was a big enough thing, in opaque products. And when we first started, now they want on value, and it's and liquid and depth. And obviously that's our role, but that means we're a service that needs to be paid for in some way. And if we're going to be sustainable in our growth path and our valuation, it's got to be more on the service side. And that's I guess what our gone.
I think, that was a very good point, right? When we all started, EBOP spreads were $4 wide, and probably even more, $5 wide. And if you showed an offer $2-3 above value, that was a big thing, and you'll end up getting lifted. Whereas now you're expected to make sharp 2 ways down the curve, liquid contracts for almost 25 cents a ton wide, as tight as it can be. But then the cost basis hasn't changed at all. It's still, legacy from before. And as you said, that is not sustainable.
Well, the market's starting to wake up. Why should I pay for data that I am contributing to? As in, like, a PRA and exchange model is essentially you guys trade on our stuff, and then we're going to charge you back to show you what you did. That's, it's not their proprietary data. You could argue, and I think the FCA and the exchange, the regulators have been regulators have been very clear about that. But again, they've got their own business models to sustain as well. They've got to think, how do they make money and grow consistently? So this dogfight, this, how do you call it, like an arms race, couldn't agree more. But I think innovation will win rather than necessarily consolidation, because consolidations happen, like you said. Like Platts and Argus completely own the PRA, ICE and CME completely own the exchanges. Kepler Energy Aspect, supply and demand analysis. Like, you have to find some way to innovate. And I think the likelihood is that consolidation within the offering is probably the next big move.
Yeah.
You need to be able to offer everything, or at least the majority of, and be the single source of truth, rather than trying to be a bolt-on service when people's budgets are already maxed out.
Yeah.
I mean, one trade house was saying to me not long ago, he's like, our analytics cost 100 million a year.
Yeah.
And he's like, analytics, and it might be fine when they're making billions, but
Yeah.
as soon as you have a year like this, and next year probably likely the same,
Yeah.
they're going to start looking at this. We can't afford these luxuries when, as you say, they're so easily available online. Like you look at ship tracking, that's actually digesting freely available information into tech. And it's just a matter of time before Google or something like that just goes, well, if it's free, we'll just do it better. So why would we pay for that? You have to have proprietary data if you're going to sell data in the long run, right?
Yeah.
So that's, anyway, that I thought.
But I think also, just to touch on what you mentioned earlier, Marex is a good example of a company that's evolved where they've kind of pushed their core business. Again, I'm sure their brokering is a big revenue generator for their business, but their core business and why they IPO'd and why they got that valuation was purely based on them evolving themselves and identifying a sustainable business model, which is clearing to clients they already have and
making
using
smart
those relationships, good interest rate environment, and they purely IPO'd based on that. And again, Talit Prebon is a good example where their market cap was 1.5 or 1.6 billion, and that was purely based on this tech company being worth 1.5 billion.
The data business.
The data business, which kind of values their brokerage at almost zero or discounted. So, you have to evolve your business and you have to
play to the market's demands, right? What does the market need and want? And markets don't get less efficient, they get more efficient.
Exactly.
So where is everyone in that place? It's going to be a very interesting few years.
Yeah, and I think we have built the groundwork to be in a very good place in this industry or in this space over the next 5 years, to have those data offerings, to have those technology offerings, to have those service offerings, which you already do. So it's just displaying it in user-friendly ways where traders or brokers or the industry can use it.
Well, that's the thing for us, right? We've always been about user journey without even realizing it, because we've always been doing high frequency trading, and you have demand for lots of different things. You want information fed to you very quickly. You want to know what's going on in other markets instantly, well concise. So everything we've built is based on like what we would like to see. And I think we need to continue to take that forward. Like everything that in our tech is like, that is what a trader wants, and they want it to work very well, and they want it to go beyond 10 times better what they have, not just a bit better. And I think the other thing we haven't touched on is you mentioned about volumes growing massively, and for a while there was a big renewable kind of narrative, which obviously still exists, but it was more the anti-oil pro-renewable narrative is not as strong as it once was. And even despite all these things, oil volumes in financial markets have just gone up and up and up and up. So one big area for us is we want to encourage more and more flow into this market, right? We're positioned as the liquidity provider. We want more volume.
Yeah.
So I think for us, it's going to be a whole new adventure, a whole new journey as we welcome, the retail audience as we go to offer that offering, which is coming soon. And
that's very exciting.
That's very exciting, and also an investor offering, right?
Yeah.
And people being able to trade who wouldn't traditionally been able to have traded in this market. For too long, it's been closed to people, and I think that's going to be a big part of people's business models. How do you cater to maybe not the masses, but a whole new market segment, a whole new target available market as a way to grow your underlying business model? And that's another example of like
if you're giving the oil industry, you have not a handful, hundreds of companies, but you're talking about giving access to 7 billion people to these niche products, which are probably good hedges against inflation, against transport, against demand. And it's an unknown space. Again, you want to target high net worth individuals who understand sophisticated investors. But again, if there is appetite in this space, imagine the liquidity, imagine the volumes, imagine the flow you're going to see. And as a business, we can easily digest that flow. We can easily absorb it. And that's the kind of sustainable business. That's the kind of thinking outside the box, right? You can fight with exchanges, you can fight with brokers, you can fight with PRAs and, achieve something. But this is in our control. This is in our hands. We can kind of narrate it and do the narrative the way we want. So that's something exciting you guys have been working on and I've been involved in as well. And I think we hired... was it Andrea from IG?
He was actually running Money Farm. He was at IG before.
Yeah. So again, another good subject matter expert where we can kind of
Rely on him to
lead it. So I think that's, again, the more and more we touch it is, our technology, Flux, which is a great platform. I use it all the time, and I've always wanted something like this when I was trading. And now that I trade less, amazing way to monitor the markets on your phone, on WhatsApp, when you're on holiday. And I've shown it to some of my close traders in the industry, and they all love it. But again, it's funny how, it was a great product a year ago, but when you look back, it was really bad, right? And then we got Ishan, CTO, again, amazing hire. And he's just transformed it within a year to the next level so quickly. Whereas previously when we speak to tech, can you get me this WhatsApp bot? He's like, oh yeah, that'll take 6 months. Ishan hired a person and in a week he delivered that. So, that's the confidence you need. Those are the people you want to surround yourself with. Because if you have people who just say no or 6 months to everything, which is what we had, and we didn't know enough about technology. So for us, 6 months was okay. And then, if you were still with that team, we'll be so behind the curve.
And you can't have that's fatal, right?
Oh, it's fatal to the business. So again, you have to have the right people, the subject matter experts who, you can always find some subject matter experts who are pretty, outdated or just arrogant and think they know everything. Whereas when you get the right people who listen and do what you want and use their expertise, that's kind of the perfect recipe, right?
So when you look at the company cash balances now, and we own the majority still of the business, but obviously shareholders do too. Another weird thing that I think would be interesting for other people to hear about is how you start to think of that money as your cash. And it's like when you put these investments in play, and they're quite left field. Retail is a big new project for us, and we've had many projects. As you say, you need to rely on these people, but it's not just a relying on to get something done anecdotally. They're the custodians of your investment. That's real cash, and it's quite interesting. Has that changed your risk appetite at all?
Yeah, it's kind of a tough one because we haven't really paid dividends over the last 3 years. So everything we've made as a business, we kind of keep reinvesting. And, you see traders getting big paychecks and bonuses. And then I think, okay, maybe I should go back to trading gasoline or something. But again, it's your conviction, right? Do you believe in what you're doing? Do you believe in the journey you're on? Do you believe on the people you're in this journey on, right? Retail, just to get it started and going, you throw a few million into it. And again, this is hard-earned cash, which we've saved over the last few years. When you get traders, you pay sign-on bonuses. When you put drawdowns, right? So if everything goes bad, you kind of feel like it's going out of your pocket. But yeah, it is a tricky one, considering we haven't paid dividends in 3 years. So we should look to pay some dividends at some point.
That's what I was going to say, and that's I think what we have. Although we're very different people, I think that is the one thing we have in common. I think it's much more interesting for us to push the boundaries and to take measured risk. It's like kind of that's our career, right? Managing risk in essence. And I think, as much as we don't want to lose it, I think it's the joie de vivre, right? It's like what we're here, like it's what we enjoy doing. And I think, I don't know. I just think it's interesting to touch on that because a lot of people, what's your exit plan? What are you looking to doing? Even on the board, it's like, we need to know what do you guys want to do with this business? And you can't answer it because we don't know where it's going to go. We just know we need to take it to the next level. We know how that looks, but it could evolve. It could evolve beyond that. And you don't know, is it an IPO? Is it a strategic investment? Is it just entirely organic? Is it acquisitions? Is it debt? We just have to play. We just have to accumulate all our cards and play the game.
But I think we are holding a good hand, right? Because the amount of interest with everything we do from various significant parties in this industry shows that we are onto something really big and something really good. But again, you have to tread waters carefully. You don't want to put all your eggs in one basket. And we have a good portfolio effect, right? We've hired a diverse bunch of senior traders. We hired Jonah from VTOL, ex-VTOL, DRW, James Anderson, Jody, Ben, Ante Mirko. Again, if you do your work and you hire, you have a portfolio of 6 good people and you've done the work, hopefully net that should make money. The same way the businesses we are trying, whether it's Flux, whether it's retail, whether it's research, they are now starting to show signs of revenue. We've hired Harry as well, head of research. So I think director of research. So I think, at the end of the day, if you don't try, you'll never know. And you just got to be nimble. You've got to have a stop in place. You have to know when to stop or call it a day on each business venture. You might get it wrong and people might laugh at you and people might, be like, haha, I told you, or, who do these guys think they are? But we've built our business over the last 8 years going through these same motions of people being like, oh, these two kids, they need brokers, they need us, we do, don't get me wrong. But we've always been treated like kids, and it's nice that we've proved otherwise, and we've built this business very successfully, touch wood, over the last 8 years, and now getting high caliber people like Pete Smith, Jonah,
it's a sign of confidence,
kind of proves that what we've, it kind of backs what we've done over the last 8 years, right? And it'll be exciting to grow the business with these people as well. Jonah comes with a wealth of systematic and technology trading, building, various trade ideas. And as we try and expand that to the trading floor, that's going to be a different avenue of revenue for our business as well. So we've added a lot of new styles of traders, but it's also going to complement our business. It's going to complement our market share. It's going to bring steady revenue into the business. We are, at the end of the day, we've built our whole business on a recurring P&L model where we have steady P&L each month, steady growth of P&L, and market making is our core business plan, right? We need market share. We need market influence. So bolting on things around that carefully, I think we've done very well, and it's kind of integrating that more and more and more into our system. And again, the Dubai office is to integrate and bolt on more market share, right? Because we are not a VTOL. We are not going to run 5, 10, 20 million VAR. We are pretty content. We have a good business model. We do what we do, and we keep doing it over and over again. So there's no point trying to aim to be Citadel. We're not going to have data, or we are not going to ever compete at the levels there, because they focus on something completely different to what we are doing.
Yeah. I think on that note, then, a good thing to end with is, recruitment. At the end of the day, we've evolved very much the roles that we have to offer, what the business is trying to do. And we talked about this a lot last year, but we should always re-emphasize it, right? The people we want in the business. It's funny, the more we've diversified and needed expertise, the more we've realized, finance people, compliance people, tech people, it always comes down to the same thing. Of course, you need very good domain expertise, but the attitude and proactiveness and sense of mission is always comes through as the most important thing. And we don't want people joining here who just want to see it as a corporation and have a ride and join the next business. You want to come here because you want to be part of this journey, and there's risk in that, and you got to embrace that, and that's something that needs to be said, right? And I think that we get a lot of traded, especially when you come on the podcast, we get a lot of people from the recruitment side of trading, and I think it's a chance to say, yes, we obviously still want the core market makers. There's OTC capabilities you need to have, meaning you need to be good with people, talk, good communication. But more and more, as we head more towards platforms, algorithmic trading, systematic trading, we actually do need some of the more quantitative focused people, which is all the rage, the Jane Streets that we were talking about, the Citadels. So we are looking for that talent now, right? And I think that will open up in the grad schemes and things like that.
And I think it's going to be a field day when they come in and see how much data and information and inefficiencies there are to capture. They will love it. And again, not that we'll never be a Citadel. We will get there with steps, but the oil industry as it is, we need that talent in what we're trying to do, right? We're trying to do automated trading. We're trying to do a bit more algorithmic trading. We're trying to give offerings to our liquidity on platforms to the retail market, to the market out there. So having these smart quantitative people for that is important, as well as in the market, there's a lot of patterns and there's a lot of systematic styles. There's seasonality. There's a lot of ways to capture P&L and alpha in all the markets we trade. Simple examples, gasoline, you buy summer. Okay, it doesn't work all the time, but if you have cons digging into the data, feeding in a lot of metrics and numbers into it and finding the most optimal time to buy it. And running these things systematically, I think that's going to bolt on massively to our trading P&L and revenue. So,
and it's where the industry is going again, right?
Correct. Yeah.
People have been talking for a while about the CTA impact on Brent futures, WTI futures, and how it overextends moves, and the same will be exactly the same for swaps. Right? The more people come into that space, they'll be more quantitative, more momentum driven, and things like that.
Yeah.
So it's part of a natural evolution.
And I think as a firm, we've done that over and over again. It's just that we haven't really quantified it or systemized it or done the work and the back testing and the research to try and quantify it and make it a proper systematic strategy. It's kind of all, us as market makers, we're human algorithms. I think we are, I don't say this lightly, I think we are almost a Jane Street computer bot in our heads, all our market makers. So trying to get
millions
that information,
of
repetitions,
heuristics,
everything. So if you can kind of get these things out of our traders' heads and model it and make a system around it, oh my God, there's going to be so much opportunity. So I think hiring niche subject matter experts in that area is very important, because you can hire a graduate who knows a bit of Python, but we are looking for more credible people with more programming experience who've done it for a few years, proper Jane Street level candidates, right? And I think it's a great atmosphere and a great experience and a place for them to work.
Great. Well, we'll leave it there. Thanks, Omar, very much for your time. And I hope listeners out there really enjoyed that as much as I did. Lots to break down. And I think we're being very transparent, and hopefully that's interesting for everyone out there. And as Omar mentioned, we talked a lot about our C-suite and kind of managing directors in the business that we've hired of late. We have a playlist of Onyx Leadership Series interviews, which goes through them all and more to come. So please check that out if you can. Thanks again for listening, and see you again soon.